Welcome to The People Behind the Books, the show where we step away from the forms and figures to meet the humans who power the tax and accounting world. Real stories, real conversations, and a reminder that behind every return is a person with a journey. I'm your host, Yehuda. Let's meet our first guest. Hello, Micha. Welcome to The People Behind the Books. I'm so excited to talk to you today about your story and hopefully give some inspiration to others in the accounting world. The People Behind the Books was started with a vision to learn the stories of the humans behind the accounting and tax world. We're a pretty unique bunch, and almost every time I meet a new accountant, I learn a fascinating story behind their journey. And that's why I'm here to talk to you today, because from what I've seen, you have a pretty unique journey yourself. Let's start with the basics. Where are you from? Where did you grow up? Tell us that starting story before we even get into the accounting and tax world.
Sure. And thank you for having me. It's a pleasure to be here. Always nice to talk accounting, the industry, and anything tax. So I grew up in Rockland County, New York, which is upstate, although I always think it's funny it's called upstate because New York City is at the very bottom, and anything above that, which is a giant state, is upstate. So it's like an hour north of the city.
Yeah.
I grew up in it was a town called Spring Valley. I have an interesting family, so a great family, definitely a unique one. And went to school, was not a great student, went on to high school. I would say I was an underachiever, put it lightly. I would say I was like a B plus student for the most part. And counting was on my mind, but certainly wasn't gung ho. Now that I'm doing this apprenticeship, I've met some really impressive high schoolers who are I met one 15-year-old who was like ready to go. So I was not that guy. So yeah, that's kind of where I started. Both my parents are teachers, so a lot of like education in the family. So I like to try and emulate that for the most part. And yeah, it took me a while to get to accounting. Didn't start really until I was 25 or 26. And then I was working in a warehouse, just trying to figure out what to do, more or less. I was doing a bunch of odd jobs and landed on accounting and then started to get going. Locked in, loaded.
That's really cool. Did anyone else in your family do accounting? Like, how did you even get introduced to the field where you were like, hey, that's even a thing? Most people don't even know that it's a profession.
Yeah, that's a good point. No one in my family did accounting that I know of. It was kind of just process of elimination. I don't know, maybe it's different now. When I was in high school, I was not exposed to a lot of career paths, which I thought was a shame, and I hope they're doing more of that. They should if they're not. It was really just thinking, what am I good at? What can I do? So I was like, okay, I'm good with numbers. I can be kind of organized. I took an accounting course in senior year. It certainly didn't excite me. I was pretty confused about what like a debit and a credit was. That's kind of all we learned. And I think most people think accounting, they think a tax preparer for the most part. I would say like laymen think accountant means tax preparer and CPA means the same thing. They just think all those mean the same. And there's a lot of nuance there. That's what I thought in high school, and I think that's a lot of people's understanding. So I was just trying to figure out what to do, and I figured I'll go back to my original thought, which was accounting, and it's a very broad field, so I'll take a broad major, and then I'll narrow it down as time went on. And then that's kind of what happened. When I graduated, I didn't know what I wanted. They kind of split it into audit tax these days. I don't know if it was always like that. I would speak to my wife's grandfather, who is an accountant, and his brother is a CPA, and he tells me they used to do audit and tax together. But yeah, so now they have like the audit tax split. And when I was applying for jobs, I just kind of was open to it. I tried to pitch it like I wasn't ambivalent, like I was excited about either one, but I really didn't know either one. I kind of saw it as audit didn't seem very exciting to me, but it could open up a lot of career paths, the CFO, something long term where you could really be, a main character at a large company and really make big moves there. And there's certainly a lot in that pathway. The path of audit itself, I find not so exciting. I did a quick stint at PwC. It was kind of support for their audit team. It was like debt valuations, different things like that. And a lot of it was just felt like rubber stamping. And there's the materiality threshold, which is like obscenely high. And it just felt like
Wait, what?
not
Could you talk
that
about that? Could
exciting.
you talk about the
Sure.
materiality threshold?
Yeah, so it was like I was brand new. I was still in school and I had this internship. It was really a seasonal gig. So it was like they have seasonal employees. Internship is more of a path to being an employee. Seasonal, they hire you and you have a foot in the door, but it's, there's no commitment to you afterwards. So they just kind of threw me in the deep end. It was like end of January. I guess it was audit busy season two. And so I got like started and they were very specific about a lot of formatting, a lot of their worksheets, etc. And then, yeah, when things came up and I was like, okay, so here maybe it doesn't match, whatever. They're like, okay, well, first check if it's below the materiality threshold. There's like an individual one and there's an aggregate one. And if it's whatever, just move on.
How
And
much?
in
How much
tax,
was the materiality threshold?
I don't remember, but it was significant. I mean, these were like big insurance companies, so they were in the millions. So it's like wild.
What's $1
So
million
yeah.
between me and you? Right?
Right, right. I think the standard is whatever would cause an investor to change their mind or, adjust their ability to invest that amount. So an insurance company is like massive, so they have a giant balance sheet. So for them, I guess it wasn't that big a deal. It felt a little disheartening, kind of like I wasn't really doing anything. So that part of audit I didn't really resonate with me, but I was still open to it. There's a lot of interesting things in like financial markets and different things. You get like accustomed to different markets. It's kind of like a foot in. And you can do a lot of things with that background. And in general, and tax, I found more interesting, but I wasn't sure if I wanted to be locked into tax. I ended up just getting a job. So I picked the place that had the opening and they had the tax opening. So I took that one and I'm really happy I did. I really enjoy tax now.
Nice. Now, at what point in your journey did you go from like to get the CPA? Well, you're a CFP, CPA, and EA.
Yes, that's right. A
Okay,
unique combo.
you've collected a lot of great letters after your name, which is
Yeah.
awesome. Now, which order did
Yes.
you take, and at what point in those different career and starting jobs did you go for those things?
Sure. So at first, I really went the kind of plain vanilla path. I would say most people I speak to in college who are going for accounting, they're getting kind of a broad accounting degree, going for a CPA, looking at usually larger firms. I find that's just what they're exposed to and looking into, although that's changing slowly, I find. So I was going for CPA. I went to Puro, which had a specific program, which was kind of like this accelerated path to get a CPA because you need 150 credits. So I got 150 credits, and I still have nightmares about like getting the right courses and the right amount of credits at the right time. I had to do a lot of things to make sure I was able to fit it in. I did it. I came in with like 60 credits. I was able to get like 90 credits in like 2 years. So I really had to squeeze it in. And then after that, I got CPA. I started studying before I graduated, and then when I got my first job, I really finished my last final. I started this job the next Monday, and I got Becker, and I started studying. Oh, one great thing was at the PwC internship, on my last day, I found out they give you Becker for free. So I put in like a rush order to get Becker to make sure I had access, and it worked. So thankfully, I got Becker compliments at PwC. So thank them. And
It's
so
great.
it was very expensive, and the firm I joined, which was like a mid-sized 250 person firm, did not pay for it. So
You
thankfully, I had
really
it.
made it in the door at the last
Yeah,
second.
I did. Thankfully, yes, somebody who was also kind of working alongside me as a seasonal employee. He knew about it from the get-go. He was just kind of studying while he was there, and he told me about it. Think I'm very happy that I got the access to that. So I was really studying right away. I went for audit first because I figured if I'm doing tax, I'm not going to look at audit for a long time. At least it's somewhat fresh from school. And I say I got better and better at studying as time went on. So at first I'd watch all the videos, Peter Alinto and some of the other instructors. They're very
Nice.
dynamic and fun. As time went on, I watched less videos. I think everybody has to figure out how they study best, how they learn best. So I had to figure at first I was just really going according to the structure, watching every video, doing every simulation, doing all the multiple choice. Um, so I did audit and then I did BEC and I did those pretty quickly. I would say within the first 6 months. I had a lot of downtime at this new job. they didn't have, and I find this at a lot of firms, the firm doesn't exist anymore. It was acquired, and I'll get into that maybe later. But they had a lot of downtime, and a lot of firms don't have like robust training or really anything for like fresh grads or fresh associates to do because people don't like to give them work because they feel like it's more work than if they just did it themselves, and the training's pretty limited. So there's a lot of downtime and just kind of picking up work when it comes in. It's also really slow after between tax seasons, I should say, and
Yeah.
really between 10-15 and year end was like totally dead. So I spent like back then I was going into the office. That was pre-COVID, and I would just go in and study really the whole time. And they were okay with that. But, I spoke to one partner. He kind of said it's like CPE. It's no different. I said, yeah, just one letter off. So it works. So I got those done quickly. Then it was tax season. I did get a nice amount of work. Um, and then I think I took FAR not too far after tax season, and then reg at some point. By the time I got to reg, I really had it down to a science. I wasn't watching any videos. I did some simulations. My thing was really just doing multiple choices. And then if I didn't know something, they have a little button there that was click like reference material. I go back to material, check it out, understand it, come back to the multiple choice and answer it. And I was able to study much better then. And when I studied reg, I was also studying to understand it. So it was a very different than like audit, which I was just studying to pass the exam, and I'm probably never going to come across it again. And reg, I really wanted to understand the material. I took like very detailed notes. I did very well. I got a 90 on that one. The rest of them, I like maybe just passed or below 80s. But thankfully, I
Hey,
did pass them on
hey,
my first
75 is passing. That's all that
That's,
matters.
that's right. Yeah. So that was the CPA. And then after I got the CFP was a couple years ago. That was kind of into my career. I really enjoyed tax, but I also enjoyed like personal finance. I used to listen to this podcast called Listen Money Matters, which is a great podcast. They don't have live episodes anymore, so they have like a library. It's great. With financial podcasts, it's like you kind of need fresh material, but there's still a lot of good stuff there. Anyway, I learned a lot from that podcast. I really absorbed it. It was like listening to it constantly. So I was really into personal finance, and I really enjoyed helping people. And I saw people need a lot more help than just with taxes. So I wanted to help out with their finances too. So when I got the CFP, it was really in preparation of kind of what I wanted to do in the future. At the time I got it, it really wasn't very applicable to my work. It was just kind of an extra credential. I also didn't feel super comfortable even telling my coworkers and like superiors why I was getting it. Although they're all very into credentials too, so they were happy about it. But I really had an ulterior motive, which was one day to have a firm that does tax and financial planning.
That's
Um,
nice. Something I always found, and I used to work at a firm that did both taxes and financial planning, is there's always this ping pong game that's played between the tax people and the financial planning people, where they go, "Oh,
yeah,
retirement planning, go speak to your financial advisor. Oh, retirement planning, go speak to your tax advisor." And it's like, well, no, we need that
definitely.
both together. They work very much in tandem. So that's awesome that you were able to put that together.
Yes, thank you. And yes, I find that a lot. I still work with other financial advisors, and I try to avoid that. So, like, I just had a client recently. He has a financial advisor, and I was doing the tax side, and I said, when it comes to year-end planning, we were talking about charitable planning. I was like, you can speak to her. She's very knowledgeable on this topic. You can speak to me. You can speak to both of us. So it's an issue. I think that could be solved if like both professionals um, took ownership, but it happens with lawyers and tax people too. A lot of
Right. Who's
people in
going to write the
general.
operating agreement? Who's going to create the
Exactly.
LLC? These are the age old questions that still we don't have answers to.
Exactly. But yes, I really like the combination. How did you find the firm that you worked at? Was it enjoyable? Was it like operating because it's a pretty unique operation. I've only found a few other people to do it.
Yeah, it was an interesting journey for me, and I can go into it briefly. But for me, I left my uh, full time job as working at a law firm doing like internal accounting to finally go get my big boy staff accountant job. Um, I am not meant to sit in an office doing busy work. And the regular CPA firm is set up to sit and get lots and lots and lots and lots of hours. And I was not cut out for
Yeah.
that. I was cut out for a lot of other things, which we could talk about. But I lasted one tax season there. And I say lasted, in the sense of it was a good mutual completion of tax season.
Right.
But I had a friend there who worked as a financial advisor, and he sort of got me in. And I'll say I learned a lot of good things. I asked a lot of good questions. I wonder if you find this also. I found that in my career, I always come across these tax questions that somehow I'm the first person to ever ask that question. And maybe it comes from me being, I'm a very critical thinker, and I'm very analytical. And for me, it's never about like, well, what does it say in my tax research book? It's always about, no, what is the actual law? What does it say in the Internal Revenue Code? What does it say in the regulations? And how does that then come back to the form, which is just a form the IRS made up based on their interpretation of
Right.
the regulations and the code. That was part of, I'll say, why it wasn't a great fit. And I didn't, because it was just tax season, I didn't really have time to work with the financial advisors on the other side of the office.
So they
Luckily, I
had
have
to
a
split
whole,
up.
yeah. I mean, we could have worked together. It's just not something that happened during tax season. And then I have a whole other crazy story where right after that, I got another job being a finance manager at a startup. But it was really great for my personal journey because it gave me some insight into what it's like to work at a CPA firm, which I'd say it's certainly worth at least a season. I think the old guard was always about, let's work for 25 years and get our pension. And nowadays it's like, no, just do what you got to do to get to the position that you're looking for. And if that means staying somewhere for 1 year, that's okay. And then move on. And that's just the world we live in. And then people are becoming a lot more ambitious to achieve their goals as opposed to waiting for someone else to hand that to them. And maybe that's a good a good segue into what you've been working on lately. So, but before we get into that, you also are an enrolled agent, which, did you get that after everything else?
Yes, I got that after everything else, and that is pairs up with the apprenticeship that I'm working on. So I really got it in order to launch the apprenticeship. So I found out about the EA much later in my career, which I'm finding out is pretty commonplace, unfortunately. So I didn't know about it in college. I never even heard about it till I probably already had my CPA. And then I just started looking at it and was like, wait a sec, you can get this without even a college degree. And it does the exact same thing a CPA does. Like, why did I spend all that time, money, and effort? So, yeah, it's basically so then I was like, okay, I want to launch my firm. I want to do things in a very specific way, not the way it has been done traditionally. And in general, I kind of avoid prestige, I would say. So, or I'm like, in a sense, almost like turned off by it. Like, so at big firms, they like the CPA really for the prestige. It's like a very difficult to get credential. In a certain sense, it almost seems like they make it more difficult than it has to be. 150 credits. They make you wait a couple weeks for the results, which is torturous. It's
The worst.
CFP and EA is not like that. They tell you right away. Yeah, so it's rough. So in my firm, I was thinking, okay, I really just want to gear people towards getting an EA. I really want to train people from the ground up. My thought was, I really want to make sure everyone's doing things in a uniform way. I was at three different firms altogether because I was at one that was acquired by Eisner Amper, which I was at, and then I left Eisner Amper, went to a smaller firm before I went to mine. I like to say it was like the Goldilocks approach. I got like a small, medium, and large firm, so I got a bit of everything.
Nice.
And they all had different operations, but they all kind of operated in a very traditional way. So I really wanted to do things in a specific way, do it in a uniform procedure way, because I saw once there was acquisitions, there's new people coming in, procedures get all muddled, and it really causes a lot of issue for efficiencies.
So you were saying you were working at those different firms and you got a little bit of each type of
Yeah,
firm.
size, I guess. Yeah, in a
Yeah.
sense. So like the first one was about 200 people. Eisner is a big national firm, and they were I think they were the first that started kind of the most recent PE trend in the industry. So they got private equity backed, and then they started expanding like wildfire in a sense. And So they bought up a lot of firms, and my firm was one of those that was purchased. So it's really tough. Any merger and acquisition I've seen, and there was one at each of the firms I was at, had some sort of acquisition or merger while I was there. So the first one bought a firm of their own and then were bought. Ramper obviously had many. And then even the last one I was at, they bought a small firm. I was only for 5 months and I saw it. It's very hard. I would say it causes a lot of issues. It's not that it's not the way to grow a business or that it can't be done well, but it's a very difficult thing to pull off. The ones I saw,
Tumultuous might be the right word to describe
that's,
it.
that's a good adjective, very tumultuous, and it's very hard to get everyone on the same page. So they kind of, it was almost like the wild, wild west. Everybody was filing returns for their clients in their way. And it just seemed very inefficient and very confusing, especially for the staff. We're dealing with, let's say, 5, 6, 7 managers. We're giving them all returns, and now the staff has to remember which manager likes the return which way.
Yes, I feel this viscerally. At the firm I was at, I remember seeing so much inconsistency in how returns were done, and each, like you said, each partner had their own way. And to me, I'm thinking, like, why do we not have standard operating procedures? Like, either there is a right way to do it or there isn't, and there should be a decision as a firm that this is how we do it. Do we enter the
Right.
1099s individually, or do we just aggregate them in a spreadsheet and then enter them on line 1 of Schedule C? Which one? What are the advantages or disadvantages? Let's make a decision. Now, obviously, every return might be different and there's different reasons to say that, but that decision matrix or that decision tree can be created. And then if you're expecting staff members to follow instructions, well, then make those instructions available to follow. So it's so funny you had that experience as well. Now, did you feel like that was coming specifically when things merged and private equity came in and then there were more partners, or was that always an issue?
I would say it was always an issue and exacerbated with mergers and acquisitions because it was always an issue. Well, the first firm I was at was really created through mergers and acquisitions, so it's hard to say. So I walked in and it was already like a combination of 2 or 3 firms. So it's hard to say where that came from, but I think it happens a lot. If you know, it's hard when people are coming from different firms, so they're operating a certain way, and if it's not really kind of stringent and focused, it's hard to do. And then every time a new merger happens, it happens all over again. It's really hard. So it's hard because just to get them onto your systems is really hard, and they're usually pretty resistant. In general, I've been finding more and more through my career, just people in general don't like change, especially when it's forced on them.
Yes, that's why every single tax software looks like it was built in the 1980s, because it was, and it has not changed since.
Exactly.
Every accountant says, "Don't you dare touch my tax software."
Yes, and I'm a Drake user, so absolutely.
You understand. You feel that.
Oh yeah, definitely. I used to work at B&H Electronics for a bit while I was in school, and they also had some really old software, and it was really funny. I would say older than Drake probably, but it's really hard to change over. The IRS is the same way. It's really hard to change over a software. There's just so much there. But yeah, you got to rip off the Band-Aid at some point. Drake still works good.
At what point are you going to reach out to private equity for your apprenticeship? Maybe they'd be interested.
It's a good question. I'm pretty wary of private equity, I would say.
It is a hot topic nowadays.
Sure is. I would say I didn't get a great vibe from private equity backed. I mean, I was kind of had a front seat to it, and everyone's going to have their own perspective on it. I just didn't see it being a great long-term model. I'm sure it's great for expansion. Eisner Amper's like, they're going to be able to grow many, many more times than they would have able to organically. Just hard. I think it's hard on employees, hard on clients. It also just doesn't seem like incentives are aligned. Private equity, I think, wants an exit in 4 or 5 years. So they're really focusing on increasing the top line, cutting costs. So that's just my personal opinion. But
sure, that's what we're here today to get your personal opinion.
Yeah. Yep. Yeah. So so I really wanted the apprenticeship to make sure have people from the ground up. I'm training them. I also don't want to micromanage. So I want to make sure they have a great foundation and then really set them up for success and then let them kind of do their thing in a sense. So that's why I created it to begin with, because I wanted to create my firm in a way where we really had um, clear procedures and really a culture. And I think that just helps a lot when people come in from the ground up. Um, I also get bitter about the fact that like big firms often they'll pay more for recruiting than for retention. And they always, I don't know about they, but people complain about it, and just like it's almost like, yeah, obviously that's happening. It's like you can't expect somebody. I mean, there are people who just switch Big Four every year. They're like EY, PwC, KPMG, Deloitte. They'll just do a rotation because they just get more money that way. So they'll just rotate. And if they stay at them, they're not getting as big of a raise. So when you have that, I just am a big believer that incentives matter. And so when people kind of do that and then they wonder why it's happening, it's a little funny to me. So I really want, in a sense, to not do any outside hires ever, at least not on the tax and accounting side. I really want to train people from the ground up and keep them and promote from within. So that's how the vision kind of started. And then it really expanded into growing opportunity to people, really understanding what the EA is, meeting all these different people on Twitter and LinkedIn, and seeing that there are like serious heavy hitting tax pros who have an EA, and that there's really no legal difference when it comes to taxes between an EA and a CPA. It's really all about marketing and perception. And I do try and give my apprentices like the round view, and I tell them if you want to work at a big firm, you got to have a CPA because they don't promote task manager with the CPA. If you don't care about working at a big firm, I think EA is the way to go. So I really started thinking about it in terms of how to grant opportunity to people and how to set it up as its own entity. So it's not just for my firm TaxCentric to hire, but I'll get a pick. So I'll get the cream of the crop. I'll get first draft in a sense. And then I'm also setting them up whoever wants to work somewhere else. I know there's so much demand for people who are well-trained and credentialed in the field. So that's kind of an option. I'm trying to set them up with as many options as possible. Some offer them to get either CFP. There's another one called a CHFC, which is kind of like the CFP's younger brother. So in a sense, my long-term vision is to create an apprenticeship where somebody could come right out of high school, get an EA, get a CHFC, have tax and financial planning background, then they'd be a really great pick for TaxCentric, but they could also start their own firm. They could also get a job somewhere else. So I kind of see it as a big part of my firm, and I see it as it could be really something big, especially if it's, let's say I'm thinking for this new cohort, I haven't officially decided, but I'm thinking maybe like $250 a month, and let's say it's a year long, that'll be about $3,000 versus $100,000 going to get a bachelor's in accounting. And they'll be much better off after 1 year than 4 years in accounting. The downside obviously is that they won't have access to the big firm jobs. Obviously there's prestige and resume, but in terms of just having the goods and the skills and experience, I think in 1 year with this apprenticeship, you'll be in a really good shape. And it might turn into a 2-year thing. But the whole time they're getting really experience to client work. So this coming tax season, they're going to get a lot of experience with my tax clients. I'm also doing some Vita work so they get that client access. So like for my clients, they'll be doing the prep. I'll be doing the review and the client interfacing. But for Vita, I'm just going to let them roll with it, and I'll just do the kind of quality review at the end. But it will basically be there. So they'll have that front-facing opportunity. So I feel really good about it. It still is in its very early stages, but it feels very exciting.
I want to take a break for a second to tell you about TaxDome. TaxDome is the all-in-one platform for practice management made for accountants. Whether you're a solo tax preparer or run a whole team, it's the perfect tool to keep you and your jobs organized. Whether you need to send out engagement letters, invoices, or organizers, TaxDome has you covered. Before TaxDome, my job list was a mess and things were constantly falling through the cracks. Now I always know exactly which job to do, and I have all my tasks in order. Get rid of repetitious tasks with templates for everything from emails to chats to job descriptions. Everything you need right there, so you can spend more time getting work done and less time trying to remember which steps you might have missed. If you want to try it out, check out the link in the show notes. When you sign up, you'll get an extra 30 days added to your subscription. TaxDome, the most powerful platform to manage teams, clients, and projects. Sign up today using the link in the show notes for an extra 30 days added to your subscription. And now back to the show. Let's back up a drop. Can you explain at what point you ended up leaving working for someone else and you said, okay, I'm going to, not only do I enjoy doing taxes, but now I'm actually going to take a step forward and start my own firm, which is not something everyone does. So there's like two levels of a spark in you that you decided to move forward with. And let's talk about that real quick.
Yeah, sure. So I always had this vision. I would say I was thinking about it recently. It's been like at least since 2021. I was trying to think, most accounting services, tax services are catered to the term high net worth individuals, which is kind of like a corporate way of saying wealthy individuals. Which is nice, especially like when you have clients that are so sweet and nice, and it is a big help for them. But there's always a part of me that really likes helping people and really wants to help kind of average regular people. So I wanted to figure out a way where I could cater to a less a less high net worth individual,
a medium net worth or a low net worth.
Yeah,
because
exactly.
The law applies equally across the board. We all need to file taxes.
Exactly. So I have been kind of brainstorming. I always like to think about things and think about structures and systems and different things and trying to solve the problem. How could I create a firm that would cater to this crowd? So first I think about the fact that they exist. The H&R Block, Jackson Hewitt, TurboTax has a guided one. There's obviously the self-prepared. I find they're all missing something in that quality it varies, to put it charitably. And when you self-prepare, that also, I would say the same. I would say it's similar or worse. It's rare that I see a self-prepared return that I don't think, okay, I would have done something differently. Not always is it worth amending, but certainly it's like, I would have done that differently. Sometimes they're really bad. Sometimes they are only a little bad. So especially this year, where there's so many above the line deductions, you got no tax on tips, overtime, car loan interest, charity. It's like, good luck self-preparing. I don't think anyone in 2025 for the 2025 tax year should really be self-preparing. It's really a minefield.
Yeah. Plus, this year is going to be the Wild West because none of the forms have changed. And you even have, all these issues coming up, like how on a 1099 NEC from Uber, it doesn't show tips. From when you get your pay stubs and it shows overtime, depending on which state you're from, that may not be the overtime the IRS is talking about. So there's a whole, I don't even know how us tax professionals are going to deal with it.
Right.
Like all the more so, consumer tax software. I have no idea how anyone's going to handle that. So I totally agree with you. Obviously, full disclosure, we are both tax preparers and in the business of preparing people's taxes, but
obviously
for a very good reason, because we've seen all the horror stories. Why don't you talk about what's like the worst self-prepared return you've seen?
It's funny. I just saw someone post on Twitter just the other day. They filed an extension, but they somehow filed a amended return and just wrote filing for extension. I don't know how you pull that off, but things like that just happen. I mean, I used to self-prepare my own returns, and before I knew what I was doing, and I messed it up. So even my first year, it was a little confusing in New York City. I think I moved to New Jersey. So whenever you're dealing with residency issues, good luck.
Yeah, it gets really complicated, especially since every state has its own rules.
Yeah, exactly. And the problem with the self-prepared returns is they're asking you questions that sound very literal and surface level, but you're just like, oh, okay, I know the answer to that one. You don't realize they're just trying to pull an input from you to enter it into a calculation to now run this whole thing, and you have no idea what the ramifications of your answer are.
Right. Zero context.
So exactly. So it's just rough. I can't think of any horror stories offhand. I do know every Jersey return I see is almost always wrong because Jersey, you get to deduct rent and medical expenses.
Yes, I just had this. I just had
Yeah,
this. I just amended a return from a prior year because they forgot rent, saved the client $600, and it's
there
just
you
one of those
go.
funny things. So by me, so I use TaxDome, and now in my organizer, if you say that you live in New Jersey, like you select that as a state, and then you say you rent, then a new box pops up that's required to fill out, which is how much did you pay in rent. So I will
Ooh, I
never,
like that.
hopefully, never miss that rent deduction. But yeah, New Jersey, they just do their own thing where they're like, hey, we're going to completely recalculate everything. No such thing as standard, no such thing as itemized. We're just going to do our own thing. And then you get into more questions, which is like, well, do I charge them more because I'm basically doing itemized deductions automatically? So it's one of these really tricky things. And every
Yes.
state sort of adds those little unique complexities. So I
Yes, definitely.
100% agree. In Maryland, a few years ago, they passed a law allowing a savings account for first-time home buyers. Nobody knows about this. I'll have discussions with my clients for 3 minutes and save them $500 just because
Wow.
why would they know about it? I'm the one who sits all day and looks into these things. So,
Is that
I
on the tax return for Maryland?
mm-hmm. Yeah, so you can put up
I
to
know about that part.
$5,000 in an account. Uh, the law is super general, and they basically say as long as you self designate it as for a first time house, you can save for up to 15 years, I think it is, or maybe 10 years, and you can put up to $5,000 in it. This past year, they even added that the interest you earn is also tax deductible. Now, it's specifically a Maryland subtraction, which is the equivalent of a Maryland deduction. But for people who average around 10%, a 10% tax rate, save you $500. And hey, who doesn't want another $500 to save for their house, which anyways nowadays is going to cost you an arm and a leg. It's
Yeah.
just it pays for tax preparation itself. Certainly.
Yes, absolutely. And penalties also come up all the time, and people don't know how to get rid of them. I just had that. I had a client, um, an industry
Usually you
term I
just
learned
pay
was a
them, no? No
most people,
penalties.
yeah. And especially they get people who don't have an accountant get really scared from they get a letter from any jurisdiction. They just get nervous, I find. They're just like, why are they contacting me? Just pay them, get it over with. I find people get really anxious and nervous when they get a tax letter. That's usually my first. It's just like it's okay. This is an everyday thing. It happens all the time. So I have a client in the. I heard this term. I think when I was at Eisner Amper, they called them a boomerang client. Someone who leaves and then comes back, which is the highest compliment because they leave and for whatever reason. This one happened to leave because they were looking for like a dental specialist. Anyway, found someone they didn't like the experience. They come back. They had a $500 penalty, and I said, "Oh, did you pay this? We could probably get rid of it." And thankfully, I was successful, and in that
That's
case, saved them
great.
$500, and they were very excited to be back with me. So those are always really nice, heartwarming stories when that happens.
Yeah,
New Jersey happens to be one of the easiest ones to get penalties forgiven, I find. So it's nice.
that's
But
cool.
yeah, it's a
Yeah, one of the
softball.
things for clients that opt into IRS notice monitoring, I'll put it in 8821 on file, and then I'll get the letter usually before them. Not necessarily because the mail gets to me faster, but because I check my mail faster than most clients. Because most people don't check their mail right away.
Right.
I'll get the email notification. I'll be like, I know that it's coming, so I'll be at the mailbox waiting for them, and I'll call up the client and say before they've even checked them, I'll say, listen, you're gonna get
Yeah.
a letter in the mail. Here's exactly what it means. Don't worry about it. I got you. That's the
Yes.
best reassurance you could give to someone, especially like you said, people get so rationally or irrationally scared. And sometimes the letters are nothing. Sometimes the letters are like, you chose to share your tax information with FAFSA. I was like, oh, okay.
Right. Exactly.
Thanks,
And
thanks,
those scare
IRS, for
people too.
giving me a
Like
heart attack in the mail.
exactly. People just see IRS, they get nervous. It's funny because they were sending out like stimulus checks in COVID. At some point, people understood they were getting the check, so they were looking out for it. But before that, people were getting nervous, like anything from the IRS. And then people like get anxious and they can't even like absorb what they're reading. Like the smartest people will just not read it. They'll say, "You take it," and it's like you read it. And it's like your return was filed correctly. It's like something very
In their
simple.
defense, the IRS letters lately have been a little wonky with the
Yes.
templates. I just got one the other day where the entire notification basically said, "Hey, thanks for calling us in June. we processed and fixed the issue. Your client should be receiving a check in the next 7 to 10 days. Then there were 2 more pages of like nonsense sentences that had nothing to do with anything actual. Like, here's how to
Right.
contact us. Here's a phone number. And it was just useless
Totally.
information. But so you were at your job. Let's set the scene. You're at your job and you're thinking to yourself, I want to start this firm on my own. How did you get your first client? How did you make that jump? Did you start part-time on the side, or did you say, hey, thanks employer, I'm leaving, and start fresh? What did you do?
I would say it's a combination. So at first, I always took some on the side. So I would say after even my first tax season, I think I did friends and family. And then the next tax season, I started taking a couple on the side. I don't know if it was the official policy to allow it or if it was like a wink and nod policy to allow it, but it was certainly not an issue. The person who trained me kind of told me he does it, it's fine. So I didn't ask too many questions, but I started doing that. And so the first year was just kind of put it in maybe WhatsApp group chats or, some basic shingle hanging on social media. I don't think I got too many the first year. It was maybe 10. But there's also like firm minimums. So if there's a client that comes to the firm and they say, okay, this is too expensive for us, somebody might say, okay, just refer it to Micah or, something along those lines.
Say, hey, come here. Come here for a second. Let me tell you something.
So I tried to be very ethical about those because I don't want to pitch it first. So I waited. If I was the one in touch with them, let's say when I was at Eisner-Amper, was a little further along in my career, and I was getting certain referrals, at first it was a little confusing because I first had to pitch them on Eisner-Amper services, and then I'd wait until they either say yes or no. If I got like a real no, then I might reach out after. But that's a tricky situation. So definitely have to be careful there. And it is like a funny line. It was easier when the partner who I worked with got, let's say, a no and then said, okay. And then he referred it to me because then I felt like I had his blessing. But yes, there is tricky situations. So I think I accumulated maybe 40 to 50 clients over the years on the side. A lot of them were very small, kind of like simple 1040s, things of that nature. My prices were very low. Also, it's very hard to price when it's a side gig because it wasn't my main income at all. It was really the experience. And I wanted to build up some clients. So it was definitely very undercharged. But it was a great experience. I mean, I don't think it's any comparison between like kind of carrying the ball start to finish than working as an employee in a firm. It's just a totally different experience. I had to pick my tax software. I had to set up my own processes. I had to handle the client start to finish. There was no quality review check, so I had to be very careful. Certainly firms are always better off with a review. There's no question about that. And I hope to have one as soon as I can. But yes, so it's a very different experience. So
how did you balance working full time and also having all these returns on the side?
It wasn't easy. I would say in a sense, it was like outweighed so much. Like my side clients were such a small part of my hours that it didn't feel so crazy, but it was a little odd. Usually I kept it to weekends or nights, and it was like I was doing tax returns for the business, and they were usually very complex returns and a very different type of return and client. And then I was doing these at nights or weekends. It's not ideal, but it worked for a few years. But yeah, it's definitely not ideal. It's very hard to balance the two, and also ethically, especially when you start working from home, like when do you work on what? So, I mean, it's billable hours. So I guess as long as I'm billing the hours and getting the work done. But at these firms, it's also like getting the work done is a funny concept because if you do more, they'll just keep giving you more. So it's a little bit funny. So I guess they set themselves up for that in a bit, but yeah. So that's kind of how I balanced it. And then at this last place I worked, I really enjoyed working there. I did a crazy kind of interview stint. So when I left Eisner-Amper, I was kind of just done with the big firm feel, and we had been acquired. So I wanted to go back to a small one. I started off a mid-size. I wanted to go even smaller in a sense. So I did I guess whenever I do something, I do it very quickly and kind of all in. So I reached out on LinkedIn. Anyone who's in accounting and has at least a couple years experience knows you're going to be hit with recruiters nonstop. And I'm not, it does not say looking for a job, but even still I'm getting nonstop. The CPA also helps. I guess once you have a CPA in like 2 years, you're going to get a lot of recruiters. And
Yeah.
recruiting speed
After
up.
I announced on LinkedIn that I got my EA, I got so many messages. It was like an onslaught. It was ridiculous. So I
That's good to
totally
know.
relate.
That's good data for
Yes.
me.
Yes. That was, if you look back at my LinkedIn history, announcing that I got the EA was one of my most viral posts, I believe. Like I got a former commissioner to comment and like my post. Like it was wild.
That's
It
great.
was wild. Yeah. So you're working at this firm, you're having a great time, had clients on the side.
Yeah. Yeah. It's hard to say exactly what went wrong. I still don't really know. But basically, I was let go because it was like I was doing trainings. I was really integrated there, but it was the type of place where you have one person at top and he runs the show. Um, and it was a little shocking. It was like Friday we were best friends, and I come in Monday. It's like totally new, and he says it's not working out. Basically, bye. So that was like shocking to me. Not only because I never expected to be fired, it was also like um, I was doing really well there. Like I was introducing new procedures, softwares, and they were accepting it. It wasn't like they were turning it down. Like I pitched it and they accepted it and they purchased it and they implemented it. I was giving trainings. I developed their entire Excel like from scratch. So it was like a big part, and I was only there for 5 months. And then it was kind of like this very rash, quick, like boom, and I was just like, whoa. So after that, I felt like, okay, I was pushed out of there. I'm not going to go work for someone else. I just recruited. I just dealt with the recruiters. I kind of got a taste for what's out there. There's some great stuff out there, but it is a needle in a haystack. There's so many places I don't want to work. Let's say it's like an 80-20 split. It's going to be hard to find that 20. I do have this vision of what I want to build and what I want to do. It's kind of like, if not now, when? So I went for it. That day I got let go. I formed an LLC, sent in an S corp election, and I made an announcement on LinkedIn. At first, it was just under my own name, and then um, I rebranded as TaxCentric after tax season, and it's been great. I mean, it was a little slow going at first, especially because I wasn't planning on doing it when I did it, and I launched mid March. I mean, it was really the worst time to launch a
Wow,
tax.
you launched a tax business mid-March.
Yeah, it was not great. So I really just continued with the clients I had. So I wasn't doing much besides like doing basic getting ready work, like LLC and kind of getting the contours of what I need. I reached out to a friend who does websites. So kind of really the basics. And then I just continued with, I had some client work from all these side clients I had. It was certainly not a full-time client load, but it was plenty. And I also was able to spend a lot more time on each one of them. So if I was still working at a firm, I would try and do it as quickly as possible and minimize the phone calls. This one, every time I do a return, I would follow up and say, okay, let's have a phone call or a video call. And I was able to put a lot more effort into them and also tell them all about what I'm launching and doing. And they were all very receptive to it. I have some really great client relationships. That's also what I really enjoy is like helping people and um, feeling that impact and having that a client relationship, which is so nice. So the next piece was kind of after tax season. I got the website off the ground. It was still kind of slow going, still kind of setting up, ramping up. Most of my clients are tax clients, and then I'm trying to convert them into financial planning clients, which
Mhm.
I'm finding is a harder sell than I thought in a sense because this sector, I would say, like the mid-tier income individual has really just not had access to financial planning. They don't even really know what it is. It's really historically been like retirees, people nearing retirement. Sometimes it's people in, let's say, in the
That
tech
another way
industry.
to say that is way too late. People who
Exactly.
are
Yes.
nearing retirement. Yeah.
Right. So I am trying to get people now to do it much earlier, and I'm trying to price it in a way where it makes sense. I'm bundling tax and financial planning. And I'm trying to do it like a subscription fee, gearing it based on your taxable income. So I'm trying to do it in a way that makes sense for people. I'm still finding it is very foreign to people, and I need to work a lot more on awareness. So I have, let's say, 5 or so that I converted to financial planning clients that I'm able to work on. A lot of it I have to like fine tune my process because I don't have the professional financial planning experience. I have the theory for the most part, but I haven't worked in the financial planning world. So a lot of people on Twitter helped. I hired someone as a consultant just to run me through his. But some of these financial planners have office hours, so they're very helpful. I find there's a lot of a younger energy in the financial planning world. Maybe in the sense it's kind of newer, at least the fee advice only crowd. Tax, I do find there is starting to be, but it's still imbalanced. Like there is this fresh energy on Twitter and LinkedIn, but it's outweighed by like the giants who are doing things the old way. So I'm still kind of getting used to it, and I realize I'm going to have to do more illustrations, more awareness, really teach people what it is before I can even pitch them on if it makes sense for them. So that's
how long had you been running your firm before you thought and decided to implement this apprenticeship?
So I only started to implement it out to the beginning of August. So I always had the concept for a apprenticeship, but a much smaller scale. So I was thinking about it under 10 people. 10 people is like on the high end. And the way I was thinking about it was I'm going to have to hire these people. I don't know how fast I'm going to scale. I'm going to be on the hook to give them a job. I'm going to be responsible to them. So I didn't want to bring in too many people. I thought it felt wrong to me in a sense. And then I met someone on Twitter, and he has a company called Virtue Prep, which is geared towards education. It is kind of it's a new way of learning in a sense. It's trying to keep people much more engaged and focused. He had some EA and tax modules. So I spoke to him, and he kind of seeded the idea for me to kind of scale it in a big way using technologies. I purchased a subscription to his software, and I've been working with him very closely. And so we're going to be using that for the study material. So in a sense, it's a lot of self-study. I'm giving them weekly tasks to do. I have a couple virtual office hours per day. So in a sense, everyone is on their own path, and then there's that group connection, and I'm there to support them through the process. So a lot of it is still being fine-tuned, but it's basically a much more scalable model, and I'm not guaranteeing them a job at the end. I'm saying I'm going to have some offers, not for everyone, and I'll be able, if you want a full-time job after getting an EA, I do have a lot of connections, small, medium firms. It shouldn't be a big lift for me to, call people and search around, get you a few interviews, etc. They also have the option to set up their own shop and under my supervision. So there's like a few options there. So that really all happened in August. I was really planning on doing it at year end. And then when I got a Virtue Prep kind of in the picture, and this idea really took root with me, then I really started to get going. So beginning of August, I started kind of doing some outreach, created a flyer. Most of it was on LinkedIn. So I did it almost as a job, which was, I would say, good and bad. It's good because there's a lot of people looking for jobs and they're having a lot of trouble doing it. So I think people were excited when I reached out to them. They applied and I reached out immediately. I think a couple people were confused because I do charge $400 for this cohort. It was $400, and I did that really just to get some sort of skin in the game, which I'm finding is important because even at this price point, participation has been solid, but less than I expected. I mean, people are in school, they have a lot going on. So it is this, I'm seeing that theory is true, and even more so, it probably needs to be more than $400 in a sense. So anyway, I did it as a refundable deposit. People were a little confused. They thought they were like going for a job, and now I'm asking $400. There's a way to make money in the apprenticeship through commissions and different ways, but people were confused by that. So I met with, let's say, 80 people, most of who didn't hear of the EA, which was discouraging because these are people who are interested in the industry, either in school or looking in the industry. A lot of people were very interested. I polled people. I got a lot of high interest. And then when it came time to sign up, it was a lot less than the polling was. So I guess I see polling is why it's wrong so often.
Yeah, people's dollars are much more reliable than their mouth.
Exactly. So based on my polling, I was expecting like 50 because it was such a high amount of interest, and then I got about 15. So, which is very solid. Just compared to the expectations, it was a little confusing. So I reoriented quickly though, just kind of learned a lesson. Polling does not equal commitment. Interest doesn't equal commitment. And then I brought in a few others. Now I even stopped advertising for it, and I'm getting some people. So now we're at 22, and it's still open if somebody wants to still join now. Probably for the next week or so, and then I plan on launching another cohort either end of October or beginning of November. So then I'll probably push people towards that one. But yeah, it's so far so good.
So the apprenticeship is specifically to become an EA or to help them set up their tax office?
So it is the main goal is to become an EA. So I would say that's the primary goal. So it's really an enrolled agent apprenticeship. Um, Although the technical term might be mentorship, I just find apprenticeship is a more marketable term. But I'm looking into like the legal ramifications, etc. And to be like a registered apprenticeship legally, according to federal government, it's really like a one-on-one paid apprenticeship type of deal. But for marketing purposes, I think apprenticeship fits into people's frame of reference better. So it's
And
really
so
get an enrolled agent.
you're just like, do they have their own study courses for the EA, and then you're guiding them through that if they have any questions, or what exactly are you offering them?
Sure. So I provide the software, and then I provide 2 virtual office hours per day, with half an hour each. That's questions and answers. And if there's no specific questions, I'll just go on to the next subject. So in the meantime, I'd say there's people are just getting used to it. So there's been some questions, but that's not usually the flow of the half an hour sessions. I've usually just been talking about something or other. I try and start with like the basics, really, really basic, like 1040, W-2, tax brackets, deductions, above the line, below the line. So really basic stuff, refundable credits versus non-refundable credits. That's kind of the topics we've been talking about week 1, week 2. So I'm really trying to do like a topic per week, really get those foundational concepts. And then I do a task per week. So I gave them practice returns, which are based on my actual client returns. So the first week was single filer W-2s, and that was to get them used to 1040s and W-2s, and I'll review them. And then at some point, come tax season, they're going to have real experience with taxes. So this is all kind of ramping up, getting them ready for the EA exam, getting the knowledge and foundational concepts, and then come tax season, hopefully I hope they'll have passed the first EA exam on individual tax, although you can't take them in any order, but this is geared towards kind of doing them in order in a sense. And then they'll be ready to rock and roll tax season. And then after tax season, I think they'll be in really good shape.
Okay, as we get to the end of our time here, let's wrap up with a few rapid fire questions. The things that everyone probably wants to know. First of all, do you use light mode or dark mode?
Good question. It depends on the app and device, whichever I'm in the mood for, and then it sticks forever because I'm never changing it after that.
Never changing the settings. Okay. It's always recommended. You see this advice very often online that don't just generalize, but you should specialize and have a
Niche? Is that what you're going for?
So I was testing you to see if you would say niche or niche, and I'm happy that you said
Oh,
niche.
very good.
Yeah.
Yeah,
Okay.
I
Good.
don't
Now we
love
can
that.
continue to be friends
I don't love that
because
advice, but yeah,
yeah.
I
Okay.
try and I'm pretty general. I would say in a sense, yeah, I go niche. I guess I'm a fancy guy, but yeah.
I agree. We're on the same page there. For all the
Yeah.
haters out there that say niche, I don't know. We'll be able to work through our differences eventually, but we're gonna have to talk about it.
Well played.
Yeah, yeah. So you find right now you are generalizing, and then you're gonna. I mean, I guess you
I
are
don't think
working
I'm
on
ever going to
niche.
specialize. I guess I think it's like general, but I mean, I do avoid certain things. So like I try to avoid international because that's just its own beast. And I try to avoid certain things like real estate moguls. I try and avoid just because they have a million LLCs and I don't want to, I'm trying to avoid concentration of clients. I really want a broad clientele. So I guess in a sense, I think about it from the other way. It's not that I specialize, it's just that I block out some sections to let me focus on my broad section of basically domestic individuals and small businesses for the most part.
Nice. Okay. Well, and I'll wrap up with this. Where do you see your own firm going, as well as aspirationally where the profession is heading in general?
Yeah, that's a good question. I'm a big dreamer, so I hope I will be proved right one day. But I would like my firm, TaxCentric. Now it's only about 6 months, under a year. So from this point, it's definitely a big dream. But I would certainly like to unseat the big giants like the H&R Blocks and the Jackson Hewitts and really be able to offer that type of clientele, quality services, year-round advice, high level of customer service and financial planning, all at similar fees. So that's the big goal. We'll see how long it takes to get there, but that is the vision overall.
Okay, well, we
And
will
the
be
apprenticeship.
watching your progress, so please keep us posted.
Absolutely, thank you. And the apprenticeship is a big part of that. I look at it as kind of getting rid of gatekeepers in a sense, and that's kind of a big movement in general in a lot of industries, but offering high-level services to the general masses that have typically been reserved for the high net worth individuals. And on the other end, with the apprenticeship, offering high-quality opportunities for people who may have been locked out of it because they couldn't go to college, etc. So really on both those ends, and they're really connected, and I hope to grow them in sync. But yeah, that's kind of the broad vision of it. And the industry, I would say, is unclear where it's going. I kind of have that seesaw I described earlier. You have like this group, let's say on social media, a lot of young energy, a lot of fresh ideas, which seems very wonderful, but they're still like a small fraction of the industry. I mean, you still have Big Four. Big Four are just like insane giants. I mean insane in a good way. It's like they are multinational, like they bring in billions of dollars a year. And then you have many accounting firms who are they're trying, basically just wish they were the Big Four. They just having trouble getting there, but all kind of doing it in the same way. So a lot of offshoring, a lot of trying to implement AI, even though the way they do it is not quite ready. There's not focus on training. So like there's a lot of gaps and issues, and I don't feel very optimistic about that model going forward. So depending on if they can right their ship, or if they just have so much momentum and that they're going to keep going that way. And then on the other end, I do hope that segment kind of gets bigger and explodes, that young, fresh energy who is doing things in a new way, using much more technology, thinking about things differently, kind of understanding from first principles, how should this be done instead of how has it traditionally been done. So I am bullish on them, but the challenges to unseat the traditional model are very large.
Totally. Well, thank you so much, Mike. I really, really appreciate all your input, and I look forward to hearing more of you in the future.
Likewise. Thank you so much, Yehuda. It's been real fun.
My pleasure. Thanks for listening to The People Behind the Books. Want to join me on a future episode? Send an email to thepeoplebehindthebooks@gmail.com. No W-9 required. If you enjoyed this episode, hit follow and leave a 5-star rating. It costs $0 and is fully deductible in the category of making my day. The People Behind the Books, because every accountant counts.